Welcome back. If you've just tuned in, we're discussing the non-negotiables about policies, getting the best out of what you have. With me in studio is Smart Rand Executive Warren Ingram, and joining us is Walter van der Merwe from FedGroup. Welcome to you.
Thank you very much.
Now, we know there are two categories of insurance. There's short-term insurance and life insurance. On the short-term side, just in principle, can you give us some basics of what we need to look out for in this space?
You need to ensure that you understand the policy. What does it cover and what doesn't it cover?
I like the play on words. You need to ensure that. Yeah, got you.
Because we all seem to think that it's the same. It's not all the same. You need to understand things like what is my excess, what's my premium increases, what happens when I do have a claim, does it affect my premiums going forward? That's the type of things you need to look out for.
All right.
Yeah, and I think it's important there to understand not all insurance companies are made equal. So we've got obviously the direct market, and then we've got the advisor-driven market, and or advisor and agent-driven market. And one of the things that's difficult for me to understand is how much of the claims, or how many of the claims, the direct insurers actually pay out. It's a criticism I have. I think they work hard to not pay out your claims if I'm being unfair on them, and or maybe not. Whereas at least when you're dealing with an agent or an advisor, there's someone that actually understands the industry, and if you've got a valid claim, someone that can fight for you. I always think, how do you fight the call center agent on the other side of the phone to say, actually I did have a valid claim and someone did drive into me and I wasn't drunk, and really you should pay it out. So those are the issues that I think it's partly about understanding the product, and then also will your claim be paid. So that's always the issue for me, as well as also the best premium from some insurance company you've never heard of that has no history. The problem there is, will they have enough money to pay you out if you really need them?
So how does Tsepang Average figure out that this is a good insurance company, it has a history of paying claims, it has an ability to pay claims, it's going to treat me in a fair and transparent manner? How can we pick that up?
That's a very, very tough question to answer, and I always look at my own experience. What was my own experience? And I also learn from other people's experience. Sure. So yes, society has changed, and there's a trusted advisor that we listen to that tells us, that looks at things for us. But we should also consider what friends and family have experienced. These are real life experiences. And with any insurance, you only really know what happens when you have a claim. And that's also in terms of what's been said, when you go through a claims process, that you're dealing with somebody that knows how to assist you and handle it. My view is that it's not necessarily that they don't want to pay the claim. There may be technicalities that you don't understand. And if there's somebody there that can advise you, you can ensure that your claim is paid and you get value for money. After all, you've paid a premium and your claim gets settled.
Now, if we're talking about the life space, earlier in the earlier segment, I was talking about having a vehicle and having 3 policies against that vehicle. I'll only get paid out on one. But if I have a life insurance policy, if I have insurance with yourselves and somebody else, and I pass on, my family receive 3 payouts. Is that correct?
Correct. That's
okay.
Correct.
How does the principle differ that in the short-term world we can be over-insured and not compensated, but in the life world I can take out 3 policies on one life?
There's still the matter of insurable interest. So a car that's insured is insured for its value. That's quantifiable up front. When it comes to life insurance, especially where it's across different insurance companies, there's the accepted principle that there's an insurable interest for this individual, maybe for his family, to settle debt. There may be different interests that necessitates more than one insurance policy. The difficult part, of course, is determining how much insurance or life cover do I need.
Now, I've got 2 financial experts. You are going to give me the pearls of wisdom, Warren. How do I figure out how much is enough life insurance for me?
So I think that's a real question, because most of the time what happens when you want to know is you sit down with an advisor or an agent, and they put you in some kind of a fancy calculated model, and it comes out and says you need 50 million rands worth of life cover. You're totally underinsured, and there's always that situation where you just never have enough. So to me, I try and make it as simple as possible. Start with, clearly you need enough insurance to cover your debts if you pass away. So if you have a mortgage on your house and you've got some money that you owe on your car and there's some personal loans or whatever the deal is, that stuff is the first amount of money that you know you need to be paid off if you pass away.
And a caveat there that a mortgage bond is not necessarily sold with life cover. I've been through counseling situations where people say, look, so-and-so has passed away, the house I'm sure was covered, but it actually wasn't.
Yeah, I think it slips through the cracks, doesn't it? Because most of the time the bank will ask you or almost require you to take out a life policy. Then if you then cancel it 3 months later and they don't check up on their paperwork, etc., there could be that issue. But you have to make sure that okay, at least your debts are
cover
paid
the
off.
debts.
That's clearly not enough if you're young and you've got very young children and now your partner needs to look after the kids. I mean, clearly there's going to be a requirement for more money. So I always try and do it simply and say, what sort of income would the family need on a monthly basis to make sure that they'll be okay if you pass away? And so you can do it quite simply, almost saying, well, if it's R1 million and I draw 5% a year from R1 million, that's a reasonable amount of money to draw on a basis of a lump sum. How much is that for my family? So you can do your own almost sanity check. When you start getting these quotes from all these different advisors and agents to then determine how much money the family needs to take out or how much life cover they need to take out.
When I come back after the break, I'm going to want to talk about pricing, that the insurance cover for R1 million cover versus a 3 million cover is not necessarily 3 times the price. Stay tuned. We're going to answer that question and a whole lot more on the other side of this very short break. We'll see you just now.